Good morning, it's Tuesday, April 30th, about 6 a.m. Central Time. Overnight, we got a bit of a bloodbath going on in the precious metals markets. You got silver down 2.5%, gold down 1.34%, copper down 1%, platinum down 1.2%, and palladium down 2% as well. So markets really, after yesterday, we stayed in some choppy two-sided action, stuck between support and resistance points. All the spotlight yesterday was on the copper market and also the platinum market. Since April 12th, platinum futures had slid from $1,020 an ounce down over $100 within 13 days to $905.50 before yesterday's adjustment of a 4% rally. I dug around for some research on why the platinum futures had this sudden change of heart and this fishhook pattern back to the upside. And the reality is that a lot of ETF inflows went into the platinum market on Friday, and a lot of times could be a leading indicator for something soon to come, and I believe that's what took place. Those ETFs, when you see sudden surges in buying activity, need to go out and secure futures contracts to stay within the appropriate requirements that they have set forth for themselves. Now, if you don't like that sudden drop in the platinum prices, or you're expecting some kind of large green shoot to the upside, you could also look at platinum options, which offer quite a bit of liquidity, tight bid offers, and offer a viable solution towards people that don't want to stomach those types of big sell-offs. Now, the micro copper futures is another contract at $2,500, 2,500 pounds per contract. You can also scale in. They offer that in the liquidity that a lot of people are looking for. So a move from 462 to 463 would be a $25 gain, or from 462 to 461 would be a $25 loss, depending on if you're long or short the market. Now, overnight, this sudden sell-off really has to stem from softer Chinese PMI data and a miss in Australian retail sales. The manufacturing PMI figures had slid from 50.4 from 50.8, signaling that the recent growth in China may have some difficulty gaining the upside momentum, or at least sustaining it. The drop back in the Australian retail sales pressures the currency, and we see a big boost in the dollar index, which further weighs in on many of the other commodity markets out there. Getting into the technicals for gold and silver overnight, it seems like futures had really run aground. Gold futures are barely holding on to critical support at 23.20, while silver futures had broke through that 27.20 critical support and have had a bigger washout here in the overnight session. The wider correction could signal that the next level of support on silver, 26.47, and the 50-day moving average at 25.93. So today we will have some economic data. However, the real fireworks show begins tomorrow with ADP, JOLTS, ISM, and the FOMC statement. Consensus is that Jerome Powell, the Fed chairman, will have more of a hawkish tilt due to the higher inflation, the stubborn inflation that we've seen just recently. Now, resistance points on the S&P 500 remains at 5160, and then above that's going to be 5210. If the 5160 holds like what it did yesterday, we could see a move back down to pocket support, which is 5110 and also 5090, and those remain in play. If you got any questions on futures and options trading, I'm also going to start sending out a write-up on some of the things and some of the charts that I'm noting here in these market, these metals minute here videos. So you got any questions, look out for those as well. Give me a call. I'd love to have an account. Over at Blue Line Futures, you can call us 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.